Hello, everyone, and welcome back here to the Pulse with the PeakBot team. I am Dillon Del Rosso, co-founder and co-host of PeakBot, joined by my co-founder and co-host Ben. Ben, how you doing this morning?
Pretty good. It was on and off weekend, but it was a good weekend.
On and off weekend.
Meaning part of it was boring, part of it was all right.
So this is due to sports related events, correct?
Well, actually, the Giants won, and the Yankees won, and
which is all good.
We've got a big game coming up tonight. I'm going to be changing into my Yankees attire later on today.
Absolutely.
Yankees ALDS game 2.
Yeah, we're pumped about it. I don't know if anybody was watching the Mets-Phillies game last night. That was a good one. I have a lot of Mets and Philly fans in my life. There was some electric group chats going on last night. So that was an exciting game, but very excited to get into it here today. We have a lot on the agenda here for you. For those of you who may not be familiar with the show, Ben, myself, and our partner Thomas, we do what's called PeakBot Picks. Every week, we give each other a couple minutes to go into our watch list and make a few stock selections that we feel good about for this competition. We set the win and loss column clean. Last week, as it ended up, would have been the second week. So we have the winners and the losers of last week. We'll go through that here today. We'll also take a look at PeakBot's, at least my approach to the model portfolio, how to manage our different strategies, the wheel, trend spread, iron condor, how they complement each other, when to be activating those types of stocks in certain market conditions. Based on your risk level. Of course, none of this is financial advice. Maybe we can get a banner. I'm not on the right side to be controlling the banners this morning, but maybe I'll change that. But not financial advice. We're not financial advisors. We're going to be getting into all of that, as well as some market events, economic events this week, things to keep an eye out for, etc. Ben, did I miss anything?
No, let's get moving here.
Okay. So I think the first thing we do, based off of the cliffhanger we left people on at the end of Friday's show, is that we were very close on PeakBot Picks competition. I think with a few hours left in the market, I think I was 3 for 3. I think both of you guys were 2 for 3, but had one or two that were also super close to the strike prices. So, Ben, what I can do is I'll pull up my screen here in a second.
Okay.
I went and did the tally this morning. However, knowing me, I could, maybe got a price wrong or the previous close, blah, 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 blah. Do you want to see the results as I have them, or do you want to confirm?
Let's confirm, because you never trust the scorekeeper.
Okay. All right. So last week, these were stocks that were selected, credit spreads, either put spreads or call spreads. They were selected on the 27th. Last Friday, but the Friday prior, and they were to expire this past Friday, 10-4. So I had 3 bulls. Ben and Thomas both had 2 bulls, 1 bear. Ben, we can fly through this and take a look. So you want to start? We could start with me at the top. I had a put credit spread on ABBV. Sold strike was at $190 that I was looking to stay above.
And you did.
Yes, I did. All right. And that number at the top there, that's the previous close. You can see pre-market over there, but that number at the top is what we're looking for. So well out of the money there, premium collected. Next one was a put spread on IBM for $48 in premium, trying to stay above $217.05.
$217.50. You're above it.
Very much so. Walmart, which is the staple of my wheel portfolio right now, earned 16 in premium for this weekly contract. Put spread $78 is what I was looking to stay above.
3 for 3.
Is that not the best looking chart ever right there?
I do like it. I do like it a lot.
All right, so I'm 3 for 3. Let's go to Thomas, or you want it yours?
Doesn't matter whoever's next on the list.
That's you. Ben, okay. Put spread, bullish. Cassava Sciences, ticker SAVA, $40 earned premium, looking to stay above 25.5.
25.5.
Nailed it. Okay. 3M, Triple M, MMM, put spread bullish, $30 earned in premium for that weekly contract, $135 strike price.
This one was teetering on Friday.
Very close.
How did we end? How did we end?
Out
Oh,
of
man.
Money.
Oh, man.
2 for 2. That one was the close one. So you're in good hands there. And I feel like this last one's almost always a lock. Bearish. Ben's
DJT.
first. Yeah, Ben's first pick every week. Bearish DJT, 36 in premium, trying to stay below 17.5, and he did. So now that makes Ben and I both 3 for 3. Sounds like a rocks, paper, scissors to become, but let's take a look at Thomas. And let's go from there. So Thomas, 2 puts, 1 call. His put spread on XOM, Exxon Mobil, 85 in premium, 113. He's looking to stay above.
113 strike.
Well,
winner.
Above.
Crushed it.
J&J, little Johnson & Johnson, put spread bullish, 40 earned in premium, $160 is the stock price we're looking to stay above. Was this one close?
This one was close too.
This one was very close.
160,
I think it is.
He's got to stay above.
I think it was very close.
Oh, man.
Yeah.
Pulls it out.
And then into the last pick, Schwab bearish, 22 earned in premium, $66 was the strike. So there you have it, people.
Wow.
For the first time ever in PeakBot picks history, all 3 pickers went 3 for 3. You can see it here on your screen. All 3 picks nailed by everyone. I'm glad I got it right. As far as the tallies, I don't know what to do, Ben. There's a couple things we can do. In fact, on the tweet, I said for the first time ever, 3-way tie. All went 3 for 3. How will we settle this tiebreaker? Tune in live to find out. Well, you're tuning in live maybe to find out. I still don't know. I'm ready to call Thomas and get him on here for a live rocks, paper, scissors.
Call him up. See.
All right, I will call.
See Seriously. What he's doing.
Okay, let's call Thomas. We're gonna have him. You know what we can do?
What?
I was going to say have him. Well, yeah, but I was going to have him submit his picks verbally, but I don't know how we handle that.
What's up, Tom?
Thomas, you're live on air. No mute, nothing. You're live on air. We went 3 for 3. First time ever in PeakBot picks history. All 3 of us went 3 for 3. Your Johnson & Johnson just squeezed out. Ben's Triple M just squeezed out. We need a live rocks, paper, scissors. Doesn't need to happen now. All right, you're busy. That's fine. We can do this on Friday's show. We can make people wait. Should we do that?
I'll leave it to Thomas.
Do you want me to get on right now?
I mean, look, completely up to you. How about you surprise us if you want to jump on, and if you hop on,
I don't think he has the studio link.
I don't think. Well, we could send it to him. Thomas, we'll send you the link. Feel free to join. If not, we'll settle this Friday. Congratulations, just not full congratulations. Okay, glad we did that. Feel free to send the link if you want. Hey, if you want a live Rochambeau rocks, paper, scissors to determine the winner of last week, then we're here for it.
All right, I just sent him the link.
Awesome. Now, or pardon me. Here's an idea. We have picks that are for this week, right? So we made picks on Friday. What we can do is we can determine we can look at the stocks that we selected for this week, maybe tally them up as far as who's winning currently in these positions, and then have that determine the winner. But I don't know if that's as fun as rocks.
No, we'll wait. We'll wait.
All right, we're going to wait for Thomas, whether it's today or Friday. We're going to do that. So, okay, well, that's fun. Hey, get us while we're hot. 9 for 9 in total on last week picks. We can we'll find out what's going on there. It looks like he's got the SPY pulled up. Want to do some analysis for this week?
I do have the SPY pulled up. We talked about this a little bit on Friday, looking at the daily chart. It looks like pre-market we are down just a little bit, about $1, $2. We're down on SPY. We'll see what kind of movement we've got, but we were looking at this, and from what day is that? From the beginning or the middle of September all the way till now, we've been trading in this range of like 575 down to call it 565. So a $10 range, which familiar-ish pattern when we look back at the middle of August going into September. Will we see the same type of pullback potentially, right? And you'll notice by the picks that we made this week, I think all of mine were bearish. I think Dillon,
so.
Everybody was a majority bearish, right? At least 2 out of 3.
I might have gone on the other side here. I'll pull them up now. For last week, here I'll continue to make your analysis. But it looks like we were going to see a little bit of the curve. That's what you were kind of expecting. That's why you went bearish. I'll pull up my picks here and Thomas's.
Yep, exactly. So I'm kind of, and again, not financial advice. We've got the banner going. I'm expecting a little bit of a pullback this week. We'll see. Hopefully not too much. We do have some economic events coming up this week, and I'll just flip over to my Trading View calendar. So on this Trading View calendar, if you guys are looking to get here, you can just create a free account with Trading View, go to calendars, go to economic calendar. And then once you're on this screen, you can filter for just the US if that's all you care about. That's what I've got filtered right now. Not saying that's all I care about, but majority of what I'm
for your portfolio.
Trading. Yeah, exactly. And then I have this filter on for high importance events. And then as we can see here, I'll zoom in a little bit. No high importance events today, Monday, October 7th. No high importance events tomorrow, October 8th. We do have FOMC minutes getting released on Wednesday afternoon this week. That could cause some volatility. And we know that when FOMC happened a couple of weeks ago, the market bumped up for the next couple of days. So that could put a wrench in my theory of a pullback if minutes come out and this, it's just reliving FOMC over again. And then we see a bump up, or minutes could come out and people read between the lines of what was said and they start to, panic, and then the market starts to dip, right? And then directly after that on Thursday morning, pre-market, we've got core inflation rates. So we've got a bunch of inflation data being released on Thursday morning. And then on Friday morning, pre-market, we have PPI, month over month PPI. So
back half of the week, we get busy.
We get busy the back half of the week. Although I'll say that there's typically, it looks like a typical week. If we look ahead to next week, we got stuff happen on Thursday, Friday, although I wouldn't really consider these, major events, even though they are marked with the three bars there. All right, maybe my theory is busted there. No, I think it'll get pretty quiet moving towards the election. But if we look at like last week, there was something almost every day. We saw Powell speak on Monday, cause a lot of volatility. I know last Friday, was it Friday? No, it might have been a different day. Something was announced on Friday. Oh no, it was Thursday, PMI. That caused a quick spike in the market. So again, this isn't saying, change your strategy in any sort of way, but it's just saying, hey, there are economic events that will happen. It's good to kind of be tuned in and kind of know how each of those events will affect your portfolio.
Yep. So by the way, I was looking at it. You had 3 bears for this week for your picks. Bennett, Thomas, and I had 2 bulls.
Oh, really? I thought you guys both went majority bearish.
Now, Thomas panicked. I don't know if you remember. He made like an ultra bullish pick with no time remaining. He kind of panicked. Maybe he have done it again, would have been more bearish. But, for me, I took 2 bulls because I'm on Walmart bull you took Walmart bull. Oh no, I'm sorry, it was me. Okay, I'm looking next to your face.
I was fooling around. I was fooling around, and I just picked that as my first pick out the gate.
Yeah, that wasn't funny. You actually did have it for a little while, and then you went back and selected something else. Yeah. But for me, Ben, if you scroll down, look at the SPY technical analysis, at least for Friday, if we look at the week, we look at the month, it's still very bullish, right? Only 2 sell signals to 15 buy, a couple more as we look at the month. But, for me, I'm on the bullish side, although I can't argue with the fact that this looks like a pattern forming here without debate. You zoom out, it starts to, yeah, it could go either way. It could go either way. And we're going to talk about my model portfolio, how I'm kind of being on both sides of things, just because I'm not totally sure. But okay. So by the way, Ben, your picks last week, Bear, you were Etsy at $55, DJT again at 19, and BitX at 29.5.
Great.
Just so you have an idea.
And I am currently trading BitX.
Okay.
How's that going for you? What's the strike that I had for BitX?
So on the picks was 29.5 to earn $30 in premium.
That's a little bit better of a call than I got on the bot, probably because we did our picks half hour after the bot got into a position.
Would have given you a little more breathing room.
Yeah.
Right now that one's not favorable just because it's still early and it's getting close.
But I'm still $1.50 out of the money.
Yeah, you got time. You got time.
We're good.
Made $70 in premium on that, it looks like, for the 2 contracts, which is nice.
Yep.
Okay, cool. How about these? All right, so you're also in Walmart. You got 5 of them.
Yeah.
Put that stock's in a good spot. Well, it's closer than I thought, actually. 79 to 80.
There we go.
Oh boy.
Logged out.
So Ben, what we can do is, if we think we're interested to take a look at the picks for this week and how they're performing, we can do that. Otherwise,
there's not much of a change since Friday.
Okay. So why don't we take a look at model portfolio?
Yeah, let's do that.
All right. So then I'm going to pull up my account. I actually am glad we're doing this because I have a couple stocks that I still have a few dollars that I need out to allocate. So let me get this pulled up, and Ben and I are actually going to be providing coaching sessions on this approach to your automated portfolio. Again, not financial advice, but some good information to be shared. Ben, can you see my screen here?
Now I can.
Okay. So when we talk about the model portfolio, we're talking about, at least for myself personally, I wanted to come up with rules for myself in my PeakBot portfolio. When I look at the data, when I follow my rules and I keep emotions out of it and I'm not over adjusting or anything like that, I win. My portfolio does well. I see growth. I see a higher win rate, and I see more longevity and less like roller coaster craziness. So I needed to come up with rules that I was comfortable following. And for me, I wanted to break that down based on how am I going to break up my cash in my investment account here based on the 3 different strategies that I'm running and what's my risk level, right? So Ben and I presented on this on the Tradier Summit. When you're going and making adjustments to your automated portfolio, there's steps to follow. There's a number of things that you should do, and everybody has their own process, but there's a number of things that you should do before making any decision, whether it's manual trading or man and machine here with automated trading. So the first thing to do is what we just did, is form your opinion on the market heading into, the following week. For us, we do it week by week because that's the length of most of our trades. So we already did this. We looked at the SPY over 1 week. I really like this. Again, regardless of how things are starting to look here, in short term, I'm bullish. I still am bullish. So when I look at my portfolio, when we're in a bullish market, I like to have 60 to 70% of my cash in the wheel strategy. So the reason I go about doing this is, and Ben, feel free if you have different opinion or a different approach for your portfolio, feel free to pitch in. But
sure,
for me, the wheel is my foothold, right? The wheel is a neutral to bullish strategy. It's built for long-term premium collection on stocks that you're comfortable owning if you don't already own them, and that you feel good about in the long run. As we discussed, right? So I'm looking for long-term, stocks here that I don't necessarily want to be changing into my portfolio week to week. So when I look at stocks that I feel good about, bullish in the long run, we already looked at this Walmart chart. I mean, I don't know if there's a better annual chart out there than this right here, right now.
For the wheel, that looks pretty good.
That's amazing for the wheel, right? So that's a full year of growth. I mean, if you're not owning shares, or even if you do and you're selling a combo spread, I mean, you're collecting nice premium. You're getting in and out of your positions. And as we zoom in here, the chart doesn't get much worse. I mean, you could see, okay, over the last month, we're kind of topping out here at like $81. But I mean, there's a lot of solid movement for this stock. Walmart is something I feel really good about long term. And I'm almost taking like that Warren Buffett approach. It's like Walmart's not going anywhere. I know I'm going to be at Walmart, once or twice this week. Ben will be at it 4 or 5 times. He's got a super Walmart essentially in his backyard. So, Walmart foothold for me. I'm collecting a nice premium. In fact, if we were to look at this on the watch list, which I'll pull up here in just a second, it's actually the second on the list. Bullish low, which is always nice for the wheel, right? We want a bullish trend or a neutral trend. Low risk is great. You can see how much cash I need due to the strike price. I'm earning roughly $27 in premium every week per contract here. So on an $80 stock with a $2 wide spread, I love that, right? I absolutely love that. So I'm sticking with Walmart. Another one, I don't know if it'll pull up as easy for me here. We can maybe look at it on the, I might just go to the alerts watch list. Just easier to move around there a little bit. Bank of America is my second stock that's in my wheel portfolio. Another stock that I feel very good about long term, and one that I'm able to afford based on what I'm trying to allocate toward the wheel in total. Let's find Bank of America here. Okay. Whoa. Are they reporting earnings this week?
Looks like it. 10-15. So not this week. It's going to be next Monday, but it's still going to show up as red because volatility will increase as you get closer to earnings.
So I'm glad we looked at this, right? This is at the bottom of the watch list because it's reporting earnings in the next 10 days here. Now,
by the way, Dylan, I think you could filter for just a specific stock at the top of the watch list. This is our alerts. Scroll off the side of it. Okay.
Right here?
Yeah. So this is our alerts watch list. You could sign up for this for just $5 a week at alerts.usepeakbot.com. Lots of really good watch lists, lots of great information on here. The watch list here, all the watch lists here will update every 5 minutes during market hours.
Yeah.
So you can see the last time it was updated was on Friday. And then it'll be updating within 5 minutes of the market open today.
Perfect. So now Bank of America, when it's reporting earnings on the watch list and it's still listed as moderate risk, I like that. Ben, we don't see that often, actually.
No, we don't.
So to me, look, of course, Ben and I talk about often avoiding earnings when you're, making a lot of trades. But if you're playing long term, if I feel good enough about Bank of America for the next year, 2 years, these earnings reports are inevitable. I feel good enough about that stock to play it through earnings all year, right? I might have a bad week, bad month, bad quarter if they come out with some terrible earnings report, but I'm playing the long game on this. So if we look at Bank of America here on Tradier, another really nice annual chart. We've come back here just a little bit, toward the end of July, and now we're seeing some resistance right around this $41 price. However, again, I feel really good about this chart. We're kind of in this channel here for sure, but overall, I like Bank of America. I'm playing it in a long game. Maybe I keep a little bit of a closer eye on this than I do with Walmart, but 12 of my $17,000, whatever that math is on the wheel this week on these two stocks. So Iron Condor, okay, I'm putting 12 of I'm giving myself $5K to work with outside of the wheel. Now, $5,000 may not sound like a lot comparatively to what's available in my portfolio, but when we take a look at the trend spread and the Iron Condor strategies here, your cash goes a long way because these two strategies are built to avoid assignment. Okay, so what that means, trend spread, you still could get assigned shares if the options buyer exercises early. Iron Condor, you're not going to get assigned shares. Ben, feel free to add anything in. I mean, any asterisks. I mean, you should not be getting assigned on Iron Condor. We have a limit.
It happened once on Iron Condor when SPY made like a huge move after hours. But one time in the past several years.
So what that means is I'm able to do a lot more with my cash. I can only trade 2 stocks on the wheel because if I get assigned, which there's a 30% chance roughly, since we're selling the 30 delta on the put side here, there's 30% chance I got to buy 100 shares of Walmart. So I better have my $8,000 available for that and almost $4,000 for Bank of America. However, trend spread rolls contracts on Friday, opens Friday to Friday. On the day of expiration at 12 o'clock noon, it's going to close out your current contract and open up a new one. Now, I like to put somewhere between 20 to 30% of my portfolio in trend spread. To me, this is where I'm making picks. This is where I become more of a trader, less of an investor. I think trend spread, truthfully, compared to all 3 of our strategies, is the highest risk, highest reward. As we've seen in the market the last few months, we've had a lot of these midweek trend reversals, which is not great for trend spread, right? If you're bullish and something crazy happens with FOMC or whatever that week and the market totally turns on you, you can end up taking some pretty decent realized losses on some trend spread trades. But again, determine your risk level, determine your, the market conditions, how you feel about it. When I look at trend spread, I kind of want to be on both sides, right? I don't want to be full bulls. I don't want to be all on the bear side. I kind of want to be split. And this is where I still need to do a little bit of work with my portfolio. I selected Etsy. I was actually looking at this chart yesterday. Ben, you might want to maybe you'll look at this and determine, but talk about the opposite of Walmart. Look at this Etsy chart over the last year here. I mean, we're just falling here. Obviously, we can see over the last 3 months, we certainly got into this channel here somewhere between like $58 all the way down to $50. So it's like an $8 range here. But I mean, if we take a look at, the week, even the month, there's not a single buy signal for Etsy.
That's not optimistic.
Not optimistic, but it's nice when you're on the bear side. Right. So I'm selling calls on Etsy today. 2 of them, approximately a $2 spread. It'll pull the most recent strike prices at the 30 and 10 delta. So I really like Etsy there. Again, like this is where I'm kind of making my picks. This is a bet rather than an investment. And I got a couple more dollars to fill up here, which maybe will take some time to do. But I just going to also finish kind of explaining the Iron Condor and how I break this up. So right now on Iron Condor, I got 5 condors actually open on SPY. These opened on Friday, are set to expire today. In fact, if we take a look at my dashboard here, these are the only contracts that I have running. Right now, let's see. So my sold strikes were 574 and 567. Right now, I'm in between them, but I'm very close. We're only $1 away from 574 call. So we'll see how all that goes. But coming back here, I like to put about $2,000, somewhere between $1,500, $2,500 on the Iron Condor, knowing that I'm risking $100 a trade with about a 75 to 80% win rate. So I'm loaded up on the SPY and QQQ here. I got 2 contracts on the Qs, 5 contracts, condors on SPY there. So if we take a look, now we got 12 grand here, another 1,400 here. So we're talking like almost 14 grand here allocated. I have some more dollars to do. Ben, what do you think? I don't need to be going and looking at the watch list to fill up my trend spread stocks right now if we don't want to. In fact, it might be beneficial for me to do so when the market opens so I can get some live updated data here. But I just wanted to share. That's typically my approach. We're in what I feel to be a bullish market, so I'm going to put a majority of my cash in the wheel on conservative, mid-level, high quality stocks. I'm going to rock with Iron Condor if I don't think the market's overly volatile and we're kind of range bound. I don't like, again, there's a lot going on here. Certainly in the next month or two, I will likely be taking off the Iron Condor as we approach this election. Just going to be way too much market volatility for me to think that we can stay within a neutral zone. But for right now, I like the Condor. And then trend spread, I'll likely be filling this up with a couple more $1,000 in contracts before our trading window today. When looking at the watch list, oops, I didn't mean to close that out. When looking at the watch list, I'll likely be putting
Control Shift T.
Oh, okay. Well, thank you.
That works.
I'll likely be putting this isn't worth it anyway. I'll likely be putting more bulls than bears just because I feel that way about the market. I know Ben is on the other side of that, but that's okay. But I still will work in a couple bears as well, just to make sure I'm on both sides. So, Ben, that's my model portfolio for my PeakBot account.
Yeah, no, that's great. I like the approach too. I like the fact that you're saying that when we're in a bullish market, you want to put most of your cash in the wheel. And I guess I agree with that philosophy. And to further elaborate on that, I'd say the reason why I like it is because if you do get assigned, you are going to own the shares. And if we truly are in a bullish market, prices are going to keep getting pushed upwards. And when you go ahead and sell calls on that position next week, ideally that strike price is right around where you were assigned shares, or sometimes even greater, and you could realize a gain on the sale of the shares. So that's different than trend spread, which is just taking whatever the market gives you for the week, right? Could be a good win, could be a loss, at the size of the spread, which would be unfortunate. But it does happen. So in cases where the market is consistently moving in either direction or even flat, trend spread is fantastic. But in a choppy market, if it's overall bullish, I also prefer to run the wheel strategy.
Yeah, and I was going to pull this up too. And again, Ben and I, we're going to be, offering some coaching classes on how to, best approach automating your portfolio. Of course, not financial advice, but I was actually going to share this on screen here, Ben, and it's not pretty or anything, but I think it would be helpful just to give people an idea as to really what makes the most sense here. So give me 1 second. Let me pull this up. And there's more to this, but give me 1 second. Sorry. Okay, let's see. Ben, can you see my screen?
Yes.
Okay. So this is still, a rough draft. This isn't all the information, but this is general rules of how I'm going about my portfolio. So if we're in a bullish market, I then need to determine, am I feeling low risk, moderate risk, or high risk, right? So right now, I'm acting a bit more low risk. Okay, so if we're bullish, low risk, now we're talking about 60. As I said, I have a little bit more than that right now just because I like the stocks and the costs. But 60% of my cash is going to go into my wheel strategy if we're in a bullish market and I'm feeling low risk. I'm going to focus on high quality stocks, low volatility, etc. Iron Condor, again, like implementing tighter spreads. I pulled this from GPT. For us specifically, we're running tight spreads on Condor every time. It's $1 spread on each Condor. And then, look, when you're bullish, low risk, trend spread isn't necessarily low risk, right? You can moderate your risk pretty well on there by choosing some conservative, low volatility stocks. But I just wanted to show in a bearish market here, even if you are low risk, things change completely, right? The wheel strategy is no strategy for a bearish market. So if you're going to, low risk on a bear run, get focus on some defensive, low volatility stocks that you still feel good about in the long run. Maybe don't have high beta, not tightly associated with overall market movement. And now you're really going to be more on the trend spread bot, picking some calls, right? On some, stocks that are very clearly in a bearish trend. So this always shifts, right? I just wanted to share that, we're going to be sharing this. We're going to be coaching on this kind of stuff, but I'm constantly shifting my portfolio, whether it be week to week, month to month, based on market conditions and my risk profile. So a lot of good information there. If you want more information on that, don't hesitate to reach out. We can share more. We can get you signed up for coaching, whatever it might be. So, Ben, what else, man?
That's the agenda for today.
That's it. So, great show. Thank you for tuning in. Come back Friday at 11:55 a.m. Eastern. Thomas will be here. Guess couldn't get Thomas on the call this morning.
No. He messaged me back. He said he's not joining.
Yeah, okay. Sick Thomas. That's why he doesn't have a headshot on Friday's show. That kind of stuff. But join us Friday. We're going to be rocks, paper, scissors live to determine the winner from this week. And keep in mind, this is an important victory. Ben's 1-0. Thomas and I are winless. So it would be really nice to even that out for Thomas and I. But tune in Friday, another live show on the Tradier Hub, 11:55 a.m. Eastern. We're going to be trading hands-free, hands up while orders are being placed. So appreciate everybody tuning in. Happy week of trading. Best of luck to you. And as always, we'll see you at the peak. Take care, everyone.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.